Good morning, everybody.
Good morning.
Good morning.
Welcome. So I'm here with Caroline Carter and Ron Bruno. I'm Lindy Chapman of Relo Talk. We do it on LinkedIn Live, and we're streaming to Facebook and YouTube and to Caroline Carter's Facebook page, my LinkedIn page, and Ron's Facebook page and my YouTube page, which is non-existent. But so welcome, everybody. Glad to have everybody. We'll let people join on. If you are coming and joining us, let us know in the comments where you are joining in from today, and also any questions you might have for Ron Bruno. Thanks so much for being here this morning, Ron.
Oh my gosh, thank you so much for the opportunity, Lindy. And Caroline, it's nice to see you face to face finally.
Nice to see you too, Ron. Welcome.
Yeah, and everybody, if you don't know Caroline Carter, she's my co-host on Saturdays, and she is in Florida. She is a home transition expert and was founder of Done in a Day in Washington, D.C., and is also the author of the book Smart Moves. And Ron Bruno is a vice president of mortgage lending with Guaranteed Rate. He's here in Dallas, which is actually where I am tuning in from today. This is where I lived before we moved to Boston. And he's a licensed lender in California and Texas. And he and his wife, Karen, live in Dallas, which is where I met them. They have 2 Pomeranian puppies, and he's a bit of a nomad like myself. Ron, I don't know if you know it or not, but I lived in Chicago a couple of times, and you're a Chicago native. Yeah,
I lived in Chicago.
Yes, go Bears.
Okay. And he also grew up along the South Carolina coast and lived in Los Angeles for 16 years before moving to DFW back in, I think it was 2018, right?
That's right. Yeah, July 2018.
Yeah. I love your career journey because it started in business, advertising, business development, marketing. And then you made that shift into personal finance with Merrill Lynch, I believe. And then you transitioned to mortgage lending in 2012. And I think that's such a rich experience that you bring to the home lending process. And it's one of the reasons I've enjoyed working with you, because you really have such a breadth of knowledge and just so much to offer to not only the people that partner with you, real estate professionals and people in the real estate and financial industry, but with the consumers. So thank you so much for being with us today. Thank you to Lisa Ireton. She's our producer behind the scenes. If you have questions, she's going to poke us and let us know that we have questions in the comments. So feel free to let us know that you have questions. And yeah. So welcome. I see we have a few people on here that I know. Wendy Gilch is here, Janet Turner, Jay Mamie. Hey, Jay, good to see you. Thanks so much, everybody, for being here. Francine Dresta is here. Lynn Greenberg is here from New York. So we're kind of spanning the U.S., which is awesome. Yeah. So come and join us and learn about the home lending process today and all the questions you need to know, because it's complicated.
Well, sure. I'm ready to dive in. I don't know about you, and I represent all the consumers out here who really want to pick your brain over this next few minutes, Ron. So,
okay, I'm ready.
Good. Why don't we start a little bit with your journey from advertising to residential lending? I mean, that's quite a pivot. So what caused that? What made you decide to make that change?
Well, it's interesting. So when I turned 40, I had one of those pivotal moments in my life where I was thinking, okay, so I started in advertising and now I'm doing home mortgages. Like, what's the parallel? How could someone go about that? Right. And what's interesting is, when I thought about it at the core of the business in advertising, you have a finite amount of time,
right?
A lot of money involved,
right?
A lot of egos. You have all different types of parties that you need to manage, and each party is different, right? The way you speak to a creative is very different than how you would talk to a client or an account executive.
Right.
And you also have to fit within certain guidelines, right? So there's certain parameters when you create a full page ad or a 30-second commercial. So
you have to know who you're speaking to.
That's right. Exactly. Right. So it was interesting. One of those lessons, I actually started in advertising where I started on the creative side. So I was an intern for 2 years working for a company called 360 in Atlanta. And I was an intern and I was just a sponge. I would just soak up all of the knowledge and just volunteer for everything. That's something my dad taught me early on, just volunteer for everything.
Good for you. Yeah.
And, just jumped into it. And, when I joined the creative side, I learned that when you work with creatives, it's a very different type of messaging that you give to them. So when I eventually made the leap over to an account executive, I remember the company, they actually gave me the ability where if there were any changes that my client requested, I was able to go directly to those creatives. I was in a role previously called traffic, which was the go-between. But because I knew that business so well on the creative side, the way that I would present it to them, the creative, is I said, okay, now, this particular ad, it's great. We just have a few small tweaks, and I know it's going to take a little bit of time, but the beer's in the fridge. I've called your wife, and we're meeting at happy hour in 2 hours. You've got a seat right here, and we're going to get it all taken care of. And that's how I presented it, and how I talk to my clients, talk to realtors, talk to underwriters, talk to my processors. It's all different messaging based on what motivates them.
But why did you pick home mortgages? I mean, out of all the things you could have picked.
It's one of those things in
there, because that's kind of a dry subject. I mean, it's not like, woohoo.
It's interesting. So when I first started in business, so I started in advertising and then made the leap and realized that I'm really a business development sales type guy versus an account exec. So I moved into interactive media, and then from interactive media into national account sales, and then into I was in the corporate world. I was a global marketing director for a machine tool company. So machine tools, it's industrial manufacturing. Well, I mean, that was the first 10 years, right? So that was the first 10 years of my career. I had all of these different positions, and I loved what I did when I was working for the machine tool company, and I traveled the world. I was in China and India and Thailand and Germany and all these great places. But the biggest challenge that I had was I was not in control of my own destiny. When you work for a company, it's like having one client. When that one client fires you, your whole life is upended. So I had a hard, fast look, and I looked at, okay, what does my career want to look like now that I've reached that pivotal milestone? And I was also in the middle of getting my MBA. So I was in Pepperdine in Los Angeles getting my MBA, and I was just at that crossroads where my company had a layoff, right? So my position was consolidated, and I needed to save what's really going to be what I need to focus on. So I looked at two different industries. Number one was online video advertising, and this was in 2008. And then the other was wealth management, because what could go wrong in wealth management in 2008?
Yeah.
A few things. I want to jump in real quick and just welcome everybody that's on here. We have people from London. Robert Fletcher is on. If everybody would give us a big like so that Ron will know that you're on there. And if you want to put in the comments where you're tuning in from today, I think it's really fun to see all the different places that people are tuning in from. And I just appreciate people being here so much. And especially anybody that's a real estate agent that's here. Ron is such a great person to partner with. Again, he's licensed in California and Texas, but he certainly has a network of lenders around the country. But he does some great events and is really engaged with his real estate professionals. So especially if you're in that industry, be sure to connect with him.
I'm still trying to get to how sexy, mortgages became a thing.
Okay. All right. So in wealth management, so I worked for Merrill Lynch. I earned my stripes in the middle of a financial crisis, right? Yeah. Back then. And I joined a team, and I was able to use my marketing background because I didn't have a financial background. I had a marketing background. So I positioned our team. I was in Beverly Hills working for the CBB group. So for some of the old schoolers, they may remember the CBB group. There was the Chiriello, Barr, and Bruno group. And what I found was the material that we had was it was all great research and data. So I was able to share that with my audience, and that really started that education part of the journey. Well, I got to the point in wealth management where I said, you know what, I'm not growing as fast as I want to. Plus, in wealth management, there was the constant pressure of sell, and sell now. So one of my referral partners, actually on the lending side, I said, I'm looking to make this move. And he's like, well, why don't you just join us? And I'm like, mortgages? Like, really? Home mortgages?
Yeah,
Like, what's that all
nothing
about?
sexy about that.
Nothing sexy about that. But then he told me about it, and we had we sat down. He's like, well, this is what the career path looks like, and this is what it looks like when you sell X amount of loans. And what really got me excited about it was being able to help more people. Because in wealth management, you're talking about helping 1% of the population, because 1% of the population has $500,000 or more in investable assets.
Right.
And you can't make money as a financial advisor without investable assets. Our insurance platform was no good. So it was only investing money.
You were able to pull from all these different jobs, experiences, industries, and especially marketing, which has become more and more important in terms of positioning your brand. I mean, we didn't talk about brands years ago unless you were, Coca-Cola. Now everybody has a brand. Okay, so you brought all that to the mortgage industry, and you've done well ever since.
Yeah, and so Lindy was talking about having that background in wealth management too. So the way that I talk to my referral partners is I like to say that I understand both sides of the balance sheet, right? Because assets, they do affect liabilities and how that all fits together, and being able to not just do transactions. Because what's interesting about the mortgage business is everyone, what I saw as the industry, they were very focused about the numbers and just getting people in the pipeline and getting as many pre-approvals out the door. And if offers come in, just deal with what you have. And I said, no, that's not how it works, right?
Yeah.
So I come from a service business. The wealth management business is a service business. You spend years getting to know each of those clients, and you have meeting after meeting after meeting, and eventually you get the honor, that opportunity to work with them. So I'm not going to sacrifice capital at the expense of just getting a deal in the pipeline. So when I work on an application, I make sure that I have all of the information before we're able to take that next step. Because when I get a pre-approval letter, I want to make sure that the client feels comfortable that I've done my due diligence on my side, and I'm telling them that they're pre-approved. I'm not just giving them a letter. I'm telling them because I've done that due diligence. And sometimes that due diligence is 30 minutes. Sometimes it's 3 weeks. It depends on the complexity of the client.
That's such a critical piece of the puzzle. And it kind of leads me to my next question. And one of the reasons that we wanted to have you on here today is because of your understanding of the complexities of the financial markets and the finance side of things. I want to just talk a little bit about what's happening in the financial markets since February, even before COVID happened really in the US, that's created these low interest rates and really a refinancing boom, with a lot of people refinancing right now.
Yeah, absolutely. So, it's interesting. So when you look at what's happened in really right around mid-February. So what you had the coronavirus hadn't really reached our shores. The numbers were very, very low mid-February. It really was something that was happening in China, and what was happening in the financial markets really was a result of China with their supply chain, and people and the government and businesses, they said, okay, we're going to have a slowdown because China is the world's biggest supplier from a supply chain standpoint. So that's why you saw there was the slowdown in stock prices going down and everything else. Well, as we get closer and closer to the beginning of March, all of a sudden the Fed, right in the first week of March, they dropped the Fed funds rate by 50 basis points, right? So 0.5 percentage point. And the significance of that is when they dropped it, it was outside of their regular meetings. So the Fed, they're very stealthy. They're very slow moving. They're just this big government body that meets every single quarter, and they make decisions, fiscal decisions. But to have had this emergency meeting, dropped it by 50 basis points, that was unheard of. Typically, they're doing these things where they're doing a drop where it's 25 basis points at a time, but they usually give guidance. So at that point, the stock market went down. You would think that, no, why would that happen? But it was as a result that the Fed knows something. Yeah. Right. And what had happened is when the Fed funds rate, which is, so for those that aren't as familiar with all of the different rates, there's lots of different rates, right? So when you look at the when you look at the bond curve, right? So when you look at the different bonds, there's different maturities. Fed funds rate is the overnight rate that banks lend to each other, right? So that is at a 0 day versus a 30-year fixed mortgage, which is 30 years out, right? So when you think of bonds, think of maturity, right? So when they lower the Fed funds rate, that affected bonds all along the curve. And there still was a strong outlook, and we didn't get into any of the forbearance talk or anything like that. So what had happened is you had all of these banks just drop all their rates in sync. And you had this mass refi boom right in the beginning of March. 1 week, we were up 500% compared to 500% compared to the year.
Consumers taking advantage of the lower rates.
Yes, and it was across the board. It was government, it was FHA, it was Fannie Freddie, it was jumbo, it was non-QM. Everything dropped. So I couldn't pay people to get on the phone last year at the same time because rates were higher and there wasn't really much going on. But my phone, my text messages, my Facebook, my Facebook DMs, everyone's asking me, hey, can I get a mortgage? Hey, can I get a mortgage? It was
okay. So let's jump ahead to June 6th. Where are we now? Is your phone still ringing off the hook? What's happening in the market right now from your point of view?
I'll skip ahead a little bit. So what's happened is so as soon as the Fed, they did that big move in March, then 2 weeks after that, they actually dropped the Fed funds rate down to zero. So they went from 1.75 all the way to zero. And that's when the market went down because they said, okay, there is a serious slowdown in effect right now. And you also had the CARES Act. That was 2 weeks after that. So that happened in April. And with the CARES Act, they actually said to homeowners that we are going to protect you because they saw, so this is important, they saw that in 2008, when there was a overabundance of supply, right? So if you remember in 2008, you had this huge housing boom right after 9/11, right? So all these homes were being built and you had all of this all different types of loans that were out there where anybody can get a mortgage. Well, you had the housing crash, and instead of protecting the consumers at that point, they just said, nope, you're going to go into foreclosure. So home prices just dropped off a cliff and people lost their homes, and we went into this prolonged recession. So Steve Mnuchin, the Treasury Secretary, now he saw that and the Fed, and they said, wait, all right, we are going to need to protect the consumer. We will need to put these pieces in place so that we can protect the housing market, because if the housing market crashes again, we're going to have pandemonium, right? It's been pretty rocky since, but they really needed to protect them. So that's why they put out the CARES Act to protect consumers in the form of mortgage forbearance.
Yeah, that's
right?
awesome. And Bill Wendell, who's on here, he's been a real estate agent for decades, had a question about that. So I appreciate you addressing that, because I am, curious too, how the creative financing that led to what happened in 2008, how are we avoiding that now with so much uncertainty? Like, I want to buy a home. I contacted you recently about purchasing but I'll be honest. I'm a little reticent. I'm not sure, or reluctant. I'm not really sure that what's going to happen.
It's really interesting. So just yesterday, there was extra language from the government so this came from the Consumer Financial Protection Bureau, the CFPB. They told servicers that consumers, all they have to show is an attestation saying that, yes, I was affected by COVID. And then they are entitled to up to 2 180-day periods of mortgage forbearance.
Wow.
Yeah. So that's a lot. And the reason why, if you look at the spectrum of different types of loans, so you have government, you have, you're looking at conforming, and then you have jumbo, and then you have non-QM or portfolio loans. The reason why jumbo pretty much seized up a little bit and it became harder to get a loan is because you had all of these people. First, they were doing refis, and in a refi, there are two sides to the transaction. So when I generate a loan, when I lock a loan, there is another party, a counterparty that actually buys my loan, right? And they put that in their portfolio. Now, when you have a massive refi boom, they run out of money. So that's why the government swooped in with the CARES Act and they started buying mortgage-backed securities. They needed to flood the market. And the heart of the market are government, so FHA, VA, USDA loans, and Fannie and Freddie. That's represents 66%.
I gotta stop there. I'm going to play the squeaky consumer here.
Sure.
Let's pretend I know nothing about this process, which is, pretty close because I'm acting as a consumer here.
Mm-hmm.
Tell me about right now, June 6th. Okay.
Mm-hmm.
What are you seeing? Have you seen now as the country's opening up and our quarantine is loosening in the US, have you seen an uptick in applications?
I've seen a steady.
Like in the last week. Let's just focus on right this very second.
Okay, so right now, what we're seeing is, I would say, steady business. It was all refi in the very beginning of this year,
okay,
and now we're moving to purchases.
Yeah, let's focus on purchases for the moment. I'm trying to get a sense for the consumers out there. I mean, Lindy spoke to a very critical point or a very critical question, asking about, our state of uncertainty. What I'm trying to get a sense of is, do you see this uptick in new mortgages? Are we supposed to believe the National Association of Realtors, Lawrence Yan, who's telling us, people are now flooding out, to see homes, or they're seeing them virtually, they're buying them. Are you seeing in this last week to 10 days, are you seeing an increase in mortgage applications?
I am. The whole year has been up, right? So, and that includes purchases as well. And it's, so what's happening right now, and the way that people look at interest rates, if you have a interest rate and it's low for a good amount of time,
right,
you have the early adopters where they get in, they do their refis, they do whatever they need from a financial standpoint. Then you have people that are like, hey, that interest rate's pretty low. Hey, that interest rate's staying low. Then they're like, we really got to do something about that. So it's this effect.
Let's go back to our new purchasers. Let's people that are applying for potentially a first time mortgage. Tell me about the documentation that they need. So when they reach out to you, what are the first things you ask for? What I'm trying to get to, Ron, is what are the mistakes also that most first time home buyers may make that they can avoid by doing XYZ. We talk about, don't make huge purchases before you go to apply for a loan. So I'm looking for things like that, general insider secrets that can help to prepare our consumers out there who are not as, informed about, financing.
Right, exactly. Yeah. So,
and then the what we can avoid.
Right. So I break that down into two buckets. So number one are wage earners, right? So if you work for a company, then what we're going to ask for is a W-2. We're going to ask for 30 days of pay stubs.
Right.
Right. So consecutive. We're going to look at tax returns. And we're also going to look at your accounts. So where are you getting money from?
If you were just, furloughed or laid off due to COVID, like should we just not even bother? Should we just stay home?
No, it's always good to talk to a lender. So if there is any interest in buying a home and you just want to get a baseline, you don't have to wait till you're absolutely perfect before talking to a lender.
Yeah, but what are my chances of being approved if I was just furloughed from a company I was with for 20 years?
Well, right now, if you're furloughed, then we're not able to count the income.
Got it. Okay,
right?
so that answers my question. So let's get back to the documentation. So what do I bring to you? You say, hey, Caroline, I need, X, Y, Z. So we got the W-2s. What else? Yeah,
so you got the W-2s, you've got the tax returns, you've got your pay stubs, right?
Got it.
What I'm getting from that is I am calculating your income. right? So what we're doing is we're putting together a file that includes income. So I've got to calculate that monthly income. So everything's expressed on a monthly basis. So as a W-2 earner, it's pretty simple to calculate that, because I look at whether it's you're paid every 2 weeks or you're paid half a month or
three years of returns. How do you establish?
No, just two.
People are paid bonuses and so forth.
Well, so it's different, right? So commissions, bonuses, there's different ways to calculate that income. So if it's commission or bonuses, then I'm averaging those 2 years, right?
Okay,
so if the income is going up, then I get to average that. And if it is gone down, then I just take the lowest number, the most recent number. So that's how I do the calculation.
What do you base your decision on?
So it's in a calculator, right? So it's and that's the thing about lending. A lot of folks, and this is something I had to learn, right? Because I came from that marketing background and everything. But a lot of people, they think, okay, I've submitted everything under the sun and I've sent you all of my paperwork. Isn't the underwriter convinced? It's not about convincing the underwriter. That's
so you're telling me it's a non-emotional assessment. You plug numbers into a program and it spits out whether or not you should be approved.
That's right. And
okay, well, that's better than it is in real estate, because we know that there's a lot of, lot of input from, okay. All right. Got that.
But there are some make sense type guidelines, right? So I had a client where they were pre-approved by another lender. They went through the whole thing where, they had their offer accepted. They were in the middle of escrow, right? So they were during the home buying period, and the lender just couldn't calculate the income. So I had a second look at it and I said, well, wait a second. What's really interesting about this file is because it's FHA, I'm able to use the most recent year, so 2019, because he had just filed his taxes, plus, this particular individual, he was working in the landscape business and they were just looking at his overall income and said, well, no, the income's down. But I said, no, it's a seasonal business, because between December to March, everything's dead. There isn't landscaping in Dallas.
There is a human element to this.
Yes. Okay, and that's my job.
Okay.
That's my job. So Caroline, so what I do is I approach it from, again, I come from this wealth management background. I try to create an elegant experience. So when I talk to a client, when I get referred from Lindy's client, we talk. We just have a conversation. I ask them, tell me about where you're going to move. Tell me what you're thinking about. What do you have to put down? Tell me about your business. Tell me about your income sources.
So that you have
we're
going
to get to self-employed.
What's that? You have a full understanding of the entire application, the human element and the stats, the financials.
A million percent. Because
which is one of the things that we talk about, is it's so important to have that trusted advisor. I want to get to one of the questions that Bill Wendell asked, and he's just talking about, again, just the boom and then how do you know when it's time to buy? And another question, to me, they kind of go hand in hand. Wendy Gilch asked, and she is the founder of Selling Later, which is a platform where people can actually put their home on and say, we're going to be selling in August, just in case you know somebody, your neighbors know somebody, if real estate agents know somebody. But she says, she asked, what's your opinion of the big brokerages that are starting their own mortgage services? And I think to me that ties in a little bit with some of the concerns that I have with, I don't want to go back to a 2008 situation. And I have some real thoughts on it, even though I'm going to be purchasing a home now. And I'm very nervous about, doing it, making a purchase that I regret later.
The big question that we all want to know, Lindy, is that home purchase going to be back in Texas, or is it going to be in Massachusetts?
That's another question, and it may not be in either one. But I think things would be a little bit of a conflict of interest, in my opinion, going back to Wendy's question, if these big brokerages are also now doing mortgage services.
Yeah, that's a big area, right? So I'm seeing that. So I know that, Keller Williams, they've got their own mortgage company. You also have other divisions. Personally, I come from a place of abundance. I'm not a scarcity type guy, right? I think there's plenty of business to go around. And if there is a certain segment that they, of consumers that they feel comfortable just working with that particular realtor, and that realtor is their be all end all, and they just want to only work with them, then great. If there's a mortgage platform and that realtor is knowledgeable and they can really guide their client through the transaction, then fantastic. And it's simple, right?
I think there's also an element of one-stop shop. I mean,
it's simple, and I guess it's not so much about your business versus they're getting more business as much as it is there a conflict of interest with doing that?
Well, I do see a pitfall.
Well, I think so too. And then I go back to the truth in lending, right? I mean, you've got lender and closing fees are complicated, right? This is why Dodd-Frank created the Truth in Lending Act to create more transparency. But to me, all it did was create a bunch of acronyms, right?
Right. Yeah.
I mean,
so one of those.
Who knows what? I don't even TILA, RESPA. Who knows what that is, right?
Right. So yeah, I mean,
it's still a little murky. And then if the real estate company depends on them getting a loan in order to purchase a home that they probably can't afford if they lose their job, it just seems a little bit like you talked earlier about how it can take 30 minutes to approve somebody. It could take 3 hours to really go through.
Or 3 weeks.
Yeah, or 3 weeks, right, to go through those. So I guess my next question really is, what does a home buyer, especially a first-time home buyer, really need to understand? Not just you telling me, hey, yeah, you can. I mean, I've been pre-approved for loans, and I'm like, okay, like, did you think about the fact I've got 3 kids in college right now, right? Or that I'm an entrepreneur, and my, and of course you do, because as I've had to get entrepreneurs and people that are 1099s qualified, and that's a beast. But how can a homeowner take ownership and educate themselves on the cost of a home loan, and how do you make the complicated simple? I think, we have all these questions. We have 2 different sides of the aisle, people saying it's a bad time to buy, it's a good time to buy. I think the big thing for me is homeowner education, buyer education.
100%. And it is always a personal decision. It is a family decision. That's number one, because I saw some comments coming in here where people were asking, is there a right time to buy? It depends on the person, right?
Well, it's interesting to note that you're buying right now.
Yeah, we are.
More faith in buying because you're buying.
Yes. And my wife is self-employed, right? So we're using her income, the bulk of the income to qualify. So she has an S corp.
I bet she didn't have problem finding a lender.
Yeah, she had an insider there for sure.
Exactly.
But I'm working with my company, and I'm not the lender on the file. Now, I certainly can prep the file and get things organized and have the conversations with the lender on the other side. But I'm not running it. I can't. That is a huge conflict of interest if that's the case, right? So when you have someone who's self-employed, and self-employed is a big area right now, because there is a lot of scrutiny around it, because there's so much uncertainty, and that COVID has affected so many people. My wife is in the events business, and we're still getting a mortgage, right? She's in the event business.
Let's segue to the biggest mistakes first-time home buyers will make that you've seen over, the many years you've been doing this.
Yeah. So I always tell my clients, look, you're going to be in a bubble. You are going to be scrutinized. You are going to be harassed. You are going to be asked for every single thing under the sun. And it's not because they don't believe you. It's not because they're not convinced. It's because we are capturing a moment in time, and we're putting it into a binder, whether that is a physical binder or a virtual binder.
Right.
And there are guidelines that need to be followed. And if there is any gray area, it needs to be explained through a letter of explanation, further documentation, whatever that particular piece is. So what is going to protect you through this whole piece? Don't go buy a car. Don't go buy furniture for the new house. Make sure that you pay your bills, right? So you got to make sure you keep paying your bills. Don't all of a sudden think, oh, I need to pay off that credit card or close it. So don't do these big moves. Don't change your job, right? I had a client at the very end. I was issuing loan docs, and we couldn't get a hold of his employer. And we're like, what's going on? It was a Friday afternoon over a holiday weekend. We were about to miss the close. And I call my buyer. I'm like, hey, can you call your HR department? Like, what's going on? He's like, oh, I work for a different company now. What?
Oh,
You work for a different company now?
That's a problem.
We're the clear to close. What are you talking about? And he's like, oh, is that like a bad thing? And I'm like, well, tell me about the company. So I was able to call New York. So I was in LA. I called New York, and thank God there was someone who took mercy on me. And
So
he sent out the verification of employment.
And I would say that's one of those things. That's why to me it's so important. And I've closed loans where people have used an internet lender and it's gone okay. But to have somebody that you have a face-to-face relationship that's a personal, that's a human. And when you start with Ron Bruno, you end with Ron Bruno, right?
Yes.
I've gone with other people where it's like we were talking to Tom one day and then it was Wendy the next day. And then it was, and I didn't, and it gets really complicated. And then you don't have that person to call when things go awry. And they do, it happens.
Of course. Yeah. So the way that I look at lending is very similar to how you would take off on an airplane, right? So when you're preparing, you are, you chart your course, right? In a plane, and you make sure that you check the weather and you make sure that the tires are filled and all of these things, right? So you just do these basic steps in advance to protect the safety of everybody. You know where you're going, right? That's the biggest thing. And then once you are cleared for liftoff, you have to line everything up perfectly. It's the same thing with a loan. When we start a loan, there are procedures that we need to follow, and we need to make sure that we take off and everything goes smooth. Now, in the middle of a loan, just like in the middle,
this is real life, Ron. So I know things go sideways.
Well, there you go. So in the middle, when you're flying around, you can fly around clouds. You can avoid turbulence as much as you can. Sometimes you're going to hit it, but you can always get around it. And then when you come in for the close, it's gradual. They turn, they scale back, they turn off the thrusters, and you come into a nice, neat landing. If you start alone and you don't know where you're going and you just lock it and you take off and all of a sudden you're like, I don't have enough fuel, well, that messes everybody up, right? So
your value add proposition is the fact that you are able to provide this seamless step-by-step, process that you've gone through, hundreds or thousands of times, as opposed to someone who's just getting into, mortgage lending. Totally get that. It's like any other business.
Yes, I've got the push button, get a mortgage, but on top of that, it's me as well. Yeah. So It's not just push a button and get your mortgage and it spits out. You actually have me involved, right? So I have a financial background, as I mentioned, MBA, whatever. So I get into the file, but I'm not gonna start us off unless I've actually looked at it and stress tested it. And big thing, people that were pre-approved in 2019 might not qualify this year.
Right.
Lots have changed. Lots of things have changed.
Let's talk a little bit about how it's changed. And you walked through a closing with me with a client of mine, a former client of mine that had purchased a home several years ago, and he moved from California. So when he called me up about a month or two ago and wanted to purchase another home, you were immediately the person I connected him with, because it was a little bit unconventional and it was a little wonky the way we structured it. And you were perfect for doing that. But we did everything virtually. So how is Guaranteed Rate set up to do this virtually? What do homeowners need to know? About doing these virtual closings and getting it through to the closing table, because you've got inspections, right? You have appraisers, and some states are still really locked down. You still can't show homes in some states even.
That's true. And because there's a human element to all of this, right? I actually did there's on YouTube, I've got a video. So I brought in a realtor, I brought in a home inspector and a closer. And actually it was the same closer. So title company.
And we'll put that comment in the link for anybody that's watching. We'll put that link in the comments.
So what I think is going to happen is there's going to be post-COVID, there's going to be three types of consumers. There's going to be category one of consumers that are going to continue to shelter in place, and they're going to continue to practice social distancing based out of either fear or necessity, right? So until we have a vaccine, I think that's what's going to happen. Then you're going to have another category of consumers that can't open the country up fast enough, right? And they want things to return to the good old days of 2019. And they're going to have, I would say, the majority of the people, they're going to be somewhere in the middle. As professionals, it's our job to create a comfortable experience tailored to our clients. That's what's really important, because if I right now have a client where, and I have this client, right? So we just closed on their home. They had a daughter that was susceptible to COVID. And she told me this early on. And as a result, when they were selling their home, so they had a contingency sale, which means that they have a home to sell before buying a new home, right? So on a home that's in the low.
I didn't think that would fly in real estate anymore. Does anybody actually do that?
Yes, very much so, very much so. And it happens all the time right now. Now there are certain times where those offers may not get accepted over others, right? So I remember a couple years ago when I was in California, no one would take a contingency offer. It was either cash or you would have to have a super fast close because homes were flying off the shelves. Well, homes aren't flying off the shelves. We have very little inventory, so there is competition, but they're not flying off the shelves, right? So with this particular buyer seller, they could not have any contact. So they put their low six-figure home on the market, but they did it where they had virtual tours only. They had no open houses. They had no buyer opens. And in order to actually
bought it virtually without actually putting boots on the ground.
Correct. 100%.
In mind.
Yeah. So they bought the home, and what they had in the notes when they were doing the counter, so the agent did the counter, they said, you have to tour the home via Google Maps. So you need to make sure that you tour the neighborhood. So if there was a liquor store or a gas station or a tire shop, that you've done your due diligence and you've looked around, and that's not going to be an issue for us during escrow, right? They also created a virtual walkthrough. They did a 3D Matterport, right? That's the technology. It's called 3D Matterport. And they did this, dollhouse view. That was only reserved last year, really, for luxury listings. You never saw that on a $400,000 home. It didn't exist, right? But now agents, if they're showing that particular home, they need to embrace these virtual tools because you are going to have people that are in that particular category that they don't want to go to open houses, right?
Yeah. Before we move on to the types of loans, Bill Wendell just chimed in with another question. He'd like to talk about fiduciary duties. Who does the mortgage broker actually represent? Does the mortgage market have the equivalent of a buyer agent? Are there mortgage professionals who are legally obligated to get the best price and terms for the buyer? Let's revisit that, and then we'll go on to talk a little bit about the different types of mortgages.
Got it. That's a very good question. So I would say our degree of care is not to the degree as an agent is, right? So a realtor is a fiduciary. A wealth manager who has, that they've set up a wrap fee on their account and they're a fee only, fee-based planner, that type of thing, they're a fiduciary. A mortgage lender is not a fiduciary.
Okay, good to know.
It is a transactional business, right? So and a
much more regulated business than real estate.
Mortgages are highly regulated.
Yeah,
we're highly regulated. But what we do is when I talk to a client and I understand their financial picture. So that's why just trying to make a recommendation and send a quote without having any context, that's a huge issue, right? So I need to make sure that I really understand that full file. Now I'll give quotes to people if they want them, right? If they come to me and say, what's the rate on this? And then I'm like, okay, what's your FICO? What kind of home, how much down? Tell me a little bit about the situation, and I'll give them a quote. That's what they're looking for.
But you're not actually bound to represent the best interests of the consumer. So how do we know you are?
Yeah. So that's where the government steps in, right? So it used to be where, as a mortgage lender, we would make more money on a deal if we were able to charge a higher rate, or we put them into a certain program, or if we went to.
How do you make your money, Ron? Let's get right to it. How does a mortgage lender make their money?
Yeah. So I get, my compensation is not that lender fee. It's not the $12.90 lender fee that includes underwriting, processing, because can't make a living off that. I get paid by the lender. I get paid by the commission that I receive as a percentage of the loan that is generated from the lender. We're a sales agent. So essentially it's like a commission, right? So we're 100% commission, where the lender, for me originating that loan, they're going to pay my company, and my company gives me a split.
Got it. All right.
And it's off the loan amount. And here's the thing, there is no extra incentive for me to charge a higher rate. And in fact, I can't charge a higher rate. I have to give the base rate. and I can't give these discounts or anything like that. World doesn't exist anymore, right?
That's
I have
good to know, because we're all about, Lindy and I are both truth tellers, and all about educating consumers to, focus on what they need to know, pardon me, and why. So let's move on. We're running out of time here. Types of loans. Talk to us about the types of loans, the most popular. What do we need to know?
Okay, so I would say kind of the bread and butter, which represents 66% of all mortgages in the country, government and conforming. So that would be FHA, right? So that's where you have low down payment. You have some flexibility on credit scores. It's a little more forgiving.
Okay.
You also are able to have higher debt to income ratios. So if someone's choosing FHA, that's kind of what they look like. But I always will give a baseline, and I'll compare different options to make sure that the client is really we're choosing the right product for them, right? And then so you have FHA, you have VA.
And you
so that's
that on adjustable rate or fixed rate. You base that on what? What's your go-to? What's your immediate reaction?
It's based on the client. It's based on the client, right? So
what does that even mean? I don't know what that means.
So I'll give you an example. So in Los Angeles, I would have clients that were 50 years old, and they were an engineer, and they like things where they had a steady income, or people that were living on fixed income, where they just like things that are slow and steady and predictable.
Wins the race.
30-year fixed. 30-year fixed.
Got it.
Whereas I had other clients that were in the entertainment business, and they were they were at that point where they just got their they got on a series and they were about to take off, right? In which case they can take on a lot more risk because they were younger and they can handle the risk, and with an ARM, right? So an adjustable rate mortgage. And the way that an ARM works, there's a fixed period, right? So a 7-1 ARM, let's break it down. A 7-1 ARM, right? So that means for the first 7 years, it is a fixed payment, just like a 30-year fixed. After year 7, so in year 8, it now is subject to the market based on what is happening with that loan. So if you haven't refied or sold that home, and you're at that period, and I have lots of clients that I've done refis based on they're at the end of their period and they need to refi it into another ARM, or we look at doing a fixed rate, right? But you have caps associated with that loan. So a traditional cap structure is 226, which means that the 8th year, it can't go more than 2 points over the base rate, right? So it can't go more. So if it's a 3.5% 7-1 ARM, it can't be higher than 5.5.
Okay, let's not go sideways here, because you can see my eyes glaze over. Honestly, again, I'm representing the consumer.
Sure.
So what do I need, in terms of a down payment? Consumer, first-time home buyer. Is it still 20%? Do I have to pull out all the money from underneath my mattress? What's happening here?
It depends. So it depends, right? So it depends on how much home you're looking to buy, right? So if it is if you're looking at a home in Texas and the conforming loan limit here is 510 400. If you're looking at a $400,000 home,
like what's 510 400?
That's the loan limit. That's the conforming loan limit.
Okay.
Right? So if you're buying a $400,000 home, you can put down 5%. And if you have income that is below a certain amount, then you can put down 3%. Or if it's FHA, you can put down 3.5%.
But that doesn't mean you'll be approved.
No.
No.
All
right, got it.
You have a gamut. It's like the Hunger Games.
Okay,
you got to go through all the different, all those different
Okay.
pieces.
You got to jump through a lot of hoops. But
If I want to present as a very strong first-time buyer candidate, I'm going to cobble together my 20%, right? Would that position me as a good, provided that all of my other information looks good, all my other numbers look good, 20%?
Well, the advantage of a 20% down is you don't have mortgage insurance, right? So mortgage insurance is that little pesky fee that you have to pay anytime that it is below that 20% threshold. Now, here's the thing, Caroline, if you went and bought $1 million property in Florida, right? And you're putting down, you wanted to put down 10% or 5% on a jumbo loan, those loans don't exist anymore, right? Because the market has seized up. So in certain spaces, what you had last year, the menu of different options has collapsed. It's gotten much smaller, and the threshold has gotten much tighter. So if you had a 680 FICO and you were and you were trying to put down 5% last year, couldn't do it this year, right? There may be a lender out there or whatever, but I'm just saying generally it has gotten a lot tighter. And that's the whole reason why it makes sense to take the time, talk to the lender, have conversations, and slow it down.
Right. And I think that's why it's so great and why I pick people like you that I can trust that really have a wide breadth of knowledge, because as a consumer, I really need to go through and ask all those questions and make sure that I've really picked the right product and the right down payment, everything for my particular needs. I'm going to stray a little bit from our questions because you moved here from California.
Yeah.
And we've talked a lot about, wow, people are working from home now. That's a game changer. I have a daughter in New York and she's like, I don't have to live in New York anymore. I'm going to go live somewhere else. Right. Tell me what you love about living in Texas and why people should consider moving here. Though I have a client.
She's going to be buying in Texas, folks.
I do have a client that moved here from California in December, and he told me at closing, he's like, okay, we need a code word so that only people with the code word are allowed in.
Love it. So, first of all, the people here in Texas are incredible, right? So it was interesting. Karen and I, for the first couple of months, and even I think the first year, anytime people, they saw us, they're like, oh my gosh, welcome to Texas. It's like they themselves were the welcoming committee. So awesome. They had the authority to say, welcome to Texas. And that was what rang true everywhere we went. And it was just so nice. It's a favorable business climate, right?
Absolutely.
So my wife and I are both entrepreneurs. So we love the fact that
not to mention the weather.
I grew up in the Southeast, right? So I grew up in a swamp. I grew up in Hilton Head Island. So my wife likes to say that she married a cabana boy. But I grew up in a little resort island where it was like 100% humidity and you spent
bad hair days.
Yeah. So, but there is something to be said where you can buy, just a brand new home or rent a great apartment complex, and central air is a wonderful thing, right? In California, we had those little window units, and unless you were standing up against it, you weren't. There was no insulation. We had a kind of a 1920s home, so it's just so nice to be able to have that central air. And when you go to Costco, you're dying because it's a million degrees, and on Tuesday I think it's gonna be 104 degrees.
But it is amazing what your money can buy in Texas.
Oh my gosh, wide open spaces.
You can get a mega mansion for $500,000 or a mini mansion for $500,000 with a pool. You spend $1 million and it's amazing what you can get here compared to a 1-bedroom apartment in other cities or a 1-bedroom condo in other cities.
Or a split level in Bethesda, Maryland.
Exactly. Yeah.
Exactly.
I want to give a shout out to some of the people that are on and also ask for our kind of final round of questions. If you have any questions for Ron about the mortgage industry, qualifying, please ask us because we're as interested in the answers as you are. And again, this platform, Lindy and I are both very, very interested in truth, simplicity, transparency, and
empowering the consumer. You got to know what you don't know to make these choices. You've got to take ownership of the choices.
You do. And that's a good point, Lindy, right? So you want to make sure that you're engaged in the process because we're professionals, right? We're not CPAs. We're not attorneys. We don't charge by the hour. We can't. It'd be wonderful if that was the case.
It would be fantastic if we could.
As a realtor, we're in the same boat, right? So our value is all about before the transaction and during the transaction, and our payoff is at the end, right? That's when we get compensated. So if you have somebody who's cagey or they're not sending documents or we have to go track them down, well, they're going to get bypassed.
Yeah. Do you fire them? Do you fire them?
So
how many times have you come in last minute into a loan?
Do you push the no button?
I just said, how many times have you been called in midstream to rescue a loan?
Quite a bit. Yeah. I've had 2 of those already during COVID where they were pre-approved by the other lender last year. And then they went off that old pre-approval, got into escrow, and now they no longer qualify. So I kind of throw out the safety rope and reel them in. But the key about those particular cases is transparency, right? And being able to step in and assess control.
And pivot, understand immediately what is necessary and get there as quickly as possible to save the transaction. Right.
Yeah.
Well,
So it's getting.
No, go ahead.
Okay. So it's getting to the heart of whatever that particular challenge is. So why did the other lender say no? Right. And then screening that against us. And as soon as we get information that gets us to, oh, nope, it's a dead deal, communicating that immediately and killing it. Right. Because you don't want someone hanging on an additional 10, 15 days. Right. It's not fair.
That is brutal. So I agree, have respect for the person on the other side of the transaction and let them know, if it's dead in the water, let them know immediately, because it's really brutal to wait for answers, whether it's from banks or mortgage lenders. Listen, Ron, you have been amazing. I can say that again. I've been in the real estate industry for over 15 years. Lindy, same thing. But you always have to put yourself in the shoes of a consumer and assume they know nothing. So you really provided us with some incredible information that, regardless of how many mortgages you have ever applied for, been approved for, take responsibility for the process. Do your due diligence, educate yourself,
and find a trusted advisor.
Exactly. This has been incredibly helpful. Anybody who wants to, find out a little bit more about Ron, our show producer's putting the notes for you. You can find him on YouTube, across all social media channels. It's just been really wonderful, Ron. Thank you so much for being our guest today.
Thank you, Ron, and thank you for everybody that's been listening.
For the opportunity. Really, really enjoyed it.
Yeah.
All right. Enjoy Texas.
Thank you.
Thanks so much. Thanks, everybody, for listening. Ron, thank you so much. Bye, Caroline.
Okay. Bye-bye, Lindy.
Thanks so much. Take care.
Okay. Bye-bye.